How do you do, ladies and gentlemen? I'm your host, Seth Julian, welcoming you to today's Alvexo live trading event, the Non-Farm Payroll Report. Please indicate on the question and answer area if you can see the opening screen and hear my voice. Today we're conducting an experiment to provide live, real-time simulcast subtitles. The experimental language, of course, is Greek, as you can see, and if this is good and it works out well, then you'll be able to look at the recorded session, copy the text, and translate it into your own language. So please let me know if you can hear my.
In listen-only mode.
How do you do, ladies and gentlemen? I'm your host, Seth Julian, welcoming you to today's live trading event, the Non-Farm Payroll Report. Please indicate to me in the question area if you can hear my voice and see the opening slide, and then we will begin forthwith. Of course, I encourage you all to ask any questions that you may have during the broadcast. Feel free. We encourage the active questioning. We consider it an essential part of creating a dialogue as opposed to a monologue. So please feel free and ask anything that may come into your mind as we go. Very well, Gabriel. Thank you very much. And can you hear my voice? I assume you can, but just for the purpose of thoroughness, let me know if you can hear my voice as well. And excellent, Jonathan. Great. And I see Irving and Sandy. And excellent. Great to see you all today. All right, then, ladies and gentlemen, let's get underway. I am conducting an experiment today in real-time subtitles. And we're going to see if this works out. If it does, as you can see, the experimental language is Greek. Should it work out, then you'll be able to copy the text from the recorded sessions and translate it into your own language, whatever that may be. So we'll see how that goes. And let me introduce myself. I'm Seth Julian. I'm 64 years old. I've been trading for 51 years now. I have an MBA in finance and economics, advanced degrees in political economy. I'm a certified securities dealer from the Cyprus Securities and Exchange Commission. So with that, ladies and gentlemen, let's get underway. Now, and again, I do ask you, I encourage you to ask your questions in real time, and I'll do the best I can to answer them in a straightforward way. What's the non-farm payroll report? It's a total of the number of jobs added to or subtracted from the U.S. economy over the last month, net of farm workers, hence the silly name non-farm payroll. Now, it's important because it provides a very, very robust indicator of the health of the world's largest economy. It's the most widely followed economic event on the monthly calendar. The results of the outcome have the following effects. If the result of the outcome is approximately equal to or greater than the expectation, the U.S. dollar is likely to gain strength. If the result is less than expected, the dollar is likely to weaken. Now, again, notice the big, bold, red, italics, underlined word likely. That's there for a reason. I'm going to get to that reason in a few moments. But let me say that it refers to risk, market risk. And that is simply defined as the probability of the unexpected occurring, and occur it does. There's risk here, ladies and gentlemen. You should only be trading with money you can afford to lose because you're going to lose. We all lose. We have plenty of money. Me as the global chief strategist at Alvexo, I'm not right all the time. I don't pretend to be right all the time. I know that I'm wrong. But the hallmark, the sine qua non of success in this business is simply to make more than you lose. Because lose we will. We all do. Nobody can be in this business and not lose. Anyway, I'll get to that, and I'll get to more detail in. Thank you very much. I'm glad to hear the voice is clear. Thank you, Gabriel. I'll get to this in more detail. Now, we can exploit these results by waiting to see the true market reaction to the outcome, and I emphasize that. We wait to see the market reaction. We don't merely wait for the outcome of the report, because that is not often or necessarily how the market reacts. Not to the knee-jerk reaction that one trades along with the trend that can. Not the knee-jerk reaction, rather. We trade along with a trend that can stay in train from a few minutes to several days or more. Now, you will recall last month, we had a blowout, a huge deviation to the positive side. I was a little hesitant, But once I got my footing after about 15 minutes, I got back into some positions, and they were very lucrative, and I held them over the weekend, which, as you know, is an expensive proposition, but still, it paid, and it paid handsomely well into the next week. Now, we can trade 6 currency pairs for the event, and we're going to take a look at a potential setup on the platform before we proceed. This is just a snapshot of the the economic calendar taken from the Forex Factory site. They're all about the same. If you click on them, they give you details. This is a histogram of past events. It shows you positive jobs added to, jobs added, subtracted, and not surprisingly, this is the great financial crash, the GFC. These are different. The dot-com bubble burst. This is the post. This is the flash crash of '87. The post-Vietnam, pre and during Reagan recession, et cetera, et cetera. This is the most important slide of the presentation, ladies and gentlemen. If you take nothing away from this session, take this setup away, because it's essential to taking any money out of this market during this event. So please take notes, write this down, make sure you get this straight, because in live trading events, it's very easy to misexecute. Even for myself, well, I don't mean even for myself like I'm Superman, but for someone who's done it for years and years, decades already, it's easy to misexecute because, frankly, it's an exciting event. There's a lot of excitement, especially lately in the post-pandemic world. We've seen, well, anyway, just this is the setup. Okay, if the result is positive, or approximately positive. And we'll get to the exact data, but today's session, I think, is expecting 460,000 jobs added, which is an enormous amount, but we'll get to the scale and the order of magnitude of these numbers a little bit later, sorry. If the outcome is positive, pairs with the dollar on the right, Aussie dollar, euro dollar, pound dollar, will go down because the dollar will, in theory, strengthen. And remember, with all pairs, any asset, it's never there's no asset that stands alone. It's always in relation to something. Economics is a science of relativity. So the asset on the left, called the base, in this case currency, the base currency, but let's say it was oil. It's not oil. It's oil versus dollar. Gold, it's troy ounce versus dollar. Wheat is a bushel per dollar, etc. So it's always one asset relative to the other. Now, the exponent of the left-hand asset is always 1. Again, be it 1 barrel or 1 troy ounce or 1 bushel or what have you. And the exponent of the right currency or asset is demarcated on the vertical or the y-axis of the graph. That's the one that moves. Because it's always, if the dollar strengthens, it will take less dollars to buy the 1 Aussie, less dollars to buy the singular euro, and vice versa on the dollar on the left. In the event that the dollar strengthens, remember, this is all the positive outcome, it will take more Japanese yen to buy the singular dollar. Hence, these assets, Swiss dollar, Swiss dollar CAD, will go up. You buy those. So it's inherently confusing. Positive outcome, dollar on the right go down, dollar on the left go up. Okay, now if you're not thoroughly confused, let me add the next dimension of confusion. In the event of the negative outcome, the inverse. It will take more dollars to buy the singular Aussie, hence that asset pair will go up. You buy that. And true for the dollar on the left. Now, I understand you may very well be confused by this. I was certainly in the very beginning of my career as well, and I will be here. We'll do this together. This is a live trading event. We'll all hold hands for this. We'll walk you through. There won't be any surprises, but still, I need you to understand this because it's essential to execute. Questions, ladies and gentlemen? Okay, Gabriel, do you see the slides? Everything looks, on my control panel, looks like everything's moving as it should. All right, Gabriel, let me know if you see the slides. This is just a snap of the. We're focused on the currencies. Does it apply to gold? Asks Gabriel. No. No, it doesn't. Now then, again, this is sorry for this. This is, I don't know, this is Google, just annoying. Euro dollar, pound dollar, Aussie dollar, dollar Swiss dollar, CAD dollar, yen. They're not exactly grouped as I would like to, but that's an old story that I can't really handle at the moment. But the idea is to group them similarly so that we can buy the buys and sell the sells. Just a chart of a time that was positive. We made $1,000 just holding it over the weekend for 2 days. This is the last part of the presentation. We'll go to the live screens in a moment, but I do want you to understand this and understand this well. I like to state clearly and unequivocally that there's risk in this particular trading event, as there is in all capital market activity, period. I say this not only because the regulators under which we as a firm and I as a registered securities dealer operate oblige me to, but also as someone who has long experience in the capital markets. I well understand that particularly for beginners, the lure of fast and easy profits can quickly shatter on the rocks of market fickleness. Market doesn't always do what we expect it to. This isn't science, it's social science. The trades one enters into to exploit the non-farm payroll report have a high likelihood of transpiring according to expectation, meaning that the cause and effect between the outcome of the report and the market's reaction to that outcome are likely to occur in the way one anticipates they will. However, they sometimes don't. That is the risk in all capital market activity. The probability of the unexpected occurring, that is the very definition of risk, and occur it does. The reason we wait a few seconds or more after the release of the report to enter the positions is precisely to witness the market's reaction. This is so because sometimes the market simply does not react in the expected way. There are no two ways about this. These are human beings participating in an entirely human undertaking. And that is contrary to the imagery that finance and economics portrays itself with. It looks like NASA, it looks like the Cosmodrome in Kazakhstan. I guess I shouldn't even, well, it's not Russian. I guess we can talk about Kazakhstan. And these charts and graphs, they want to make it look like this business, engineering and science, upon which you can build buildings and entire civilizations. This world is deterministic. This means that if you know one thing, it's determinable in another context. Physics, chemistry. This is not. This is probabilistic. We live in a probabilistic world. And that means economics and finance are social sciences because they attempt to understand a human enterprise. Humans are emotional, irrational, erratic, and often do not act in their own economic interest, contrary to the classical economic bullshit that they teach you in college. All economic actors do not act in their own interest. Anybody who's lost a trade knows that. Therefore, there's a significant element of risk in their behaviors as individuals and their collective behavior as a market. The herd instinct is the most precise unifying principle explaining the market's behavior. Forget the graphs, the charts, the indicators, and the algorithms that economic foists as deterministic tools of the trade. They ain't. We follow each other. We follow signals that are generated by the market to follow along with the crowd, just like these creatures do when they're herding, or they're fooling, or they're fucking. These are probabilistic tools that we use. That means that we can say that under particular circumstances, say the NFP report, we expect the market to behave a certain way with a certain probability. In other words, when X occurs 8 out of 10 times, Y will happen. It will not happen 10 out of 10 times, nor can we be sure which of the 10 times will behave like the 8. Risk. It doesn't always have a familiar face, ladies and gentlemen. And with that, I want to bring the, that concludes the formal part of today's presentation. I want to then now go to the live screens. Do you have any questions about the presentation? This is now we're going to go to some live screens. This is the investing.com economic calendar. They're all about the same. And it shows that the expectation for the non-farm payroll report to be released in 15 minutes is 400,000. That's the expectation, 400,000. And just for thoroughness' sake, I believe it'll be the same on today's, on the Forex factory side, non-farm payroll 407. Close enough. Close enough. These are consensus reports of, excuse me, surveys that are taken among economists and financiers. So 400,000 is the expectation. That's an awful lot of numbers, but, and I said that I would try to put this into the scale, the order of magnitude into perspectives. Let's take a quick look at the histogram for this report. Now, unfortunately, the data is really, really skewed because up to here, this of course is March 2020, the end of Q2 2020, when pandemic 20.687 thousand is 20 million. That chart, that bar is so immense that it dwarfs all the other data points. You can't even see them on the chart. And notice, despite the enormity of that order of magnitude chart, you can see the other recovery ones are also huge. Next month, 2 million come back. The next one, 7 million come back. And then we're still adding 400,000 or 500,000 at a whack. Whereas if we exclude, try and bring this, if we exclude that data point, you can see this is what it usually looks like. 50, 170, 120, 280 is a huge report. This one is enormous at 290. These are huge job additions and subtractions, but they are dwarfed when we take the data point out, looks like a regular chart. It ranges between 250, minus the GFC, the Great Financial Crash. But once we include that Q2 2020 COVID thing, that's it. Boom, skews everything. So that's the order of magnitude we're looking at. We're looking at this one, by the way. Last one was 546. We expected 450. No, I'm sorry. That's the last one. Where is it? It's a little long. Yeah. It's hard to focus on them. No, you get the idea. You get the idea. How graph was skewed because of the. Oh, here we can see the last one. We expected, with forecast was 150, we got 467. Incredible, right? Incredible blowout. And there was a lot of money to be made from that. Now, let me add a very somber and dark footnote. And that is, the world is not going to be as focused on this report today as it usually is, for the simple reason that warfare has broken out yet once again in Europe. Hard to believe. Those of you who are under the age of 80 probably thought that reality was long past us. Well, it ain't. It's here, and it's shedding blood as we speak. And so there may be less interest in the non-farm payroll report than there usually is. But that remains to be seen, and it's a caveat that I just want to point out to you. I do want to bring this series of charts up. This is from the MT4 platform, and I've set up the six currency pairs that we trade. Again, the same order: Aussie dollar, euro dollar, pound dollar, dollar yen dollar, Swiss dollar CAD. These are 1 minute charts. And the moment the report is released, we flip over here to see what the actual market reaction is. Now, in the event that it's, va-va-va-voom, and let me get my va-va-va-voom sound effect just in case. We'll see it here. But I just do, and I can tell you that the expectation clearly is, at least for the last, I don't know, couple hours, that it's going to be a positive report. The dollar is stronger. Remember, dollar on the right, dollar on the left, it goes down. Aussie dollar, euro dollar, pound dollar, all down. All these people, if it goes this way, these people will be in the money. And vice versa, dollar yen, dollar Swiss dollar CAD going up. Now, I do want to mention that we don't follow. A rookie might say, "Well, look at the chart. I'll just get along board, and I can't. It'll obviously go that way. The money is betting that way." No. We don't do that. These people who get in early or try to outguess the market or second guess the market invariably lose. We don't follow them. We follow what the actual market does when after the report is released. So that is pretty much the long and the short of what we're up to here, ladies and gentlemen. Oh, the last thing we want to do is make sure our trading platform is up and running, that we're ready to execute, that it is indeed functional, that, it's okay, we're ready to go. You want to make sure that sometimes that jams up. Oh, yes. So let me make you aware of a couple of the ancillary risk possibilities that exist. And I haven't seen, frankly, I haven't really seen these in quite some time. Our servers are top notch, and the world's data infrastructure is pretty good these days. But it's still worth noting that sometimes if things really jam up, you might put a buy order in and it won't get filled. And this happens. It's happened to me. It's happened to me. It happens to all of us now and then. And it has happened to me in these live events. Excuse me. The servers don't know we're broadcasting live, and if they jam up, they jam up. So we may not get fills in all of our positions. There is another outcome as well. I don't know if we can see it here. No, you can't. You'd have to go backwards, I guess. Oh, my mistake. Oh, that was silly, wasn't it? That was totally silly. Hold on a sec. Let me just get this back, ladies and gentlemen. Here we go. Okay. Not the YouTube. What did I do? I'm sorry. Just one moment, ladies and gentlemen. I'm a much better trader than I am a video jockey. I'll put this back where it belongs, and we'll get back into business. Okay. Yes, here we could see. Now you won't see it here. Maybe show more. Sometimes the report comes out pretty much exactly even with what's expected, and it prints in black. I don't really see any here. Yeah, this is obviously you get the idea. Now here's one. Once in August of 2019. It expects 164. We get 164, and the market essentially does nothing, and we go home in 5 minutes. All right, that can happen. So those are two additional risk possibilities that occur, but pretty infrequently. Not that often. So let's open the floor to little questions, ladies and gentlemen. If you have any, let me know, and we'll deal with them now. We have a few minutes before we go. All righty. Let's see. Yes, Barbara. Barbara asks, what other assets are affected by the report? In my opinion, none. I have had people in the room over the years trade or try to trade the S&P 500 with pretty marginal success. There was one fellow who did that for a year, about a year or so. He had moderate success, but hit and miss. It was uncorrelated in any way whatsoever, and he did make a few dollars. Probably lost a few. I doubt that he made too much money at it, but that's possible. And no, Irv asks gold. No, why not? He says. I don't think I have an answer, Irving. I don't know why not. It just doesn't. We trade the 6 currencies. There might be a few other currencies, maybe, but it's a currency affair. It's a currency event. It's not really an asset. It's not a commodities event like gold or the S&P 500. My pleasure, sir. Andy asks, what are the effects of the war on these currencies? That, my friend, is a very important question. I don't deny, one that I don't really feel I'm capable of answering too well. Euro has been weakening for sure. The hryvnia and the ruble obviously are completely in the toilet. The ruble is in such bad shape, it's almost unbelievable. Sorry, my mistake. The dollar ruble, it's just a chart. It's truly frightening. It's lost, I don't know, 35, 40%. If we take it from the 23rd of February, when the war broke out, till today, it's lost 23%. It's gained back a little bit, 23%. Ladies and gentlemen, as you know, currencies usually move in the range of fractions of 1%. They don't see moves like this. Maybe in the Turkish lira because of other reasons, but no, you don't really see that. So in terms of the dollar, I guess if we take a look at the Dixie, the dollar index, the dollar has been strengthening, but again, not more for reasons of where's the DXY? I can't find it at the moment. Oh, is that it? Yeah, it's DXIC, is the US dollar composite index. Yeah. No, that's the Dow. I'm sorry, ladies and gentlemen. I'm really getting off. I'm sorry, Andy. But yes, the dollar's been strengthening for reasons concerned more with the U.S. economy. I don't think that the non-farm payroll report's, frankly, going to have. This is my guess. This is my speculation. I emphasize that it's my opinion, and I could be wrong. It won't be the first time, and surely not the last time. But because the world is so focused on what's going on, along the Dnieper River and in Ukraine in general, and the effect may be subdued, but it's very hard to know. If it's a blowout, and keep in mind, we're looking for 400,000. It's a lot of jobs added, and we're T-minus 3 minutes and counting. So we'll get ready. It's just hard to say. I don't know. The long answer to what should have been a very short answer, Andy, is I don't really know. It's really too hard to say. These are difficult times. As economists like to say, in the commentariat is always saying, all things being equal. Well, all things aren't equal, so I don't know. Any other questions, ladies and gentlemen? Okay. With T-minus 2 minutes and counting, and these tend to be long dragged out moments. They don't, these last minute or 2 minutes, last 2 minutes don't pass quickly. Any other questions, ladies and gentlemen? Feel free. This is the time to ask. We're expecting 400, anywhere around or certainly above 400 should drive the dollar stronger. And again, just for the purposes of review, that means that dollar on the left goes up, dollar on the right goes down. Now here you see it's reversed on the 1 minute chart. These rookies and amateurs, wannabes, thinking they can outsmart and second guess the market. We never follow them because they're invariably wrong. That's the expectation. That's the anticipation with T-minus 1 minute and counting. This is always a fraught moment. As I said, I've been doing this for decades. I do enjoy it. I'm not. This is the only live. Well, I do trade the oil inventory report now and then, but there's plenty of money to be made trading oil without having to attend that event. They tend to be nerve-wracking. They're a little bit nerve-wracking, and for a 64-year-old dinosaur trader like myself, I don't really need the adrenaline rush anymore. I get enough adrenaline rush just trying to take a few dollars out of the market on a regular basis. But still, it's always exciting. What is the effect of the war on commodities? I'm from Nigeria, says Kennedy. They're driving them through the roof, sir. We're driving them through the roof. Wheat is up, corn is up, gold is up fairly well. Oil and gas are through the roof. Russia, which has no products of any worth other than natural resources, which it produces in agricultural goods, and weapons, supplies the world with great quantities of both of those classes of products, and its supply is being removed from the market, thereby driving the price of the remaining supply up. So the effect, sir, is enormous. We've done very well this week trading oil and gas and wheat until it was no longer available on the site. Here we go. 678 is huge. It's a huge Huge positive effect. Yeah, we know where this is going. I don't think we need to wait too long. The effect is quite clear. Let's get into these trades immediately. We're going to, this might be slow. We're going to sell pound dollar. We're going to buy dollar Swiss. Okay, we're getting filled very nicely. We're going to buy euro. We're going to sell euro dollar. So far, so good. We're going to buy dollar yen. We're getting fills on each one of these trades. So far, so good. And we're going to buy dollar CAD. Okay. You got fills on all of those. 1, 2, 3, 4, 5. I didn't take the 6th, but we're going to stick with that. They're not making money yet, but they should. That was a very, very powerful report. And I think these are going to hold. I think these are going to hold. I mean, just look at the divergence. We expected 400. We got 6, 7, 8. An enormous deviation. Let's take out the HP12C and see what that is. 400, and we got 6, 7, 8. That's a percentage change of 69.5%. An enormous change. You don't see that every day. So the reaction was swift, and let's see if it's holding up. Well, certainly the Aussie dollar, it's contrary. The dollar CAD is going well. No, the dollar CAD's contrary as well. Wow. Stunning. It's actually, I bet you all of those positions are probably losing money at the moment. Yes, sirree. The only one that's making money is the pound dollar. Well, that's unusual. Let's give it a little time to breathe. I'm not going to stick into them for a long time. You know, this is a live trading event. We're here to make a few dollars, not to lose our shirts. Some of them are not. We didn't take giant positions either, as you noticed. But they're not going as we might have thought. The Aussie dollar is contrary. The euro dollar is contrary, but returning a bit. The pound dollar is also largely contrary. We're 3 minutes into this, so it's not a lot of time really. The dollar yen is completely contrary. The dollar Swiss is starting to make a better move in our direction. And the dollar CAD is trying to go the way we thought it would, but not so much. Let's give it a little time. Sometimes there's a lot of that may be profit taking for people who got in early expecting a huge report. So you never know. This is always the part of a trade that takes a little bit of nerve. You know, I don't like to let my losses run, but you often have to give trades a few minutes, particularly in live trading events, to breathe. Not necessarily live trading events, but certainly events as widely followed, as widely monitored as this one. So because there's so many people with positions that get involved in this trade that it just always pays to let the positions breathe a tad. So let's open up the floor to some more questions if we have. Ladies and gentlemen, feel free. The floor is open. Okay, so far, The Aussie is starting to do what we thought it should do. The euro dollar is starting to do what we thought it should do. And the pound dollar has been doing. Oh, pardon me. The dollar's, okay, they're starting to come around. Starting to come around. Hold on, just hold on a little bit. One might say I overreacted. I suppose I could have got in now, but that was such a blowout. What did I say? 69 and I call it 70% deviation, which is highly unusual. I just felt it was a good call. I could be wrong, but so far now it's starting to go our way. Those positions might be in profit already. Yeah, let's refresh. Sometimes it takes a little bit of a refresh to let us know what's going on. You can see it's a little slow. It might just be my computer connection. I got a lot going on. The broadcast often slows things down. Yeah, you see, it takes the refresh. Okay, we're starting to make money in 2 positions. 3 out of the 5. I'm making 4 out of the 5 are now in profit. Not much, but they're in the green. They're going to follow on. I'm commenting the laggard, of course, here is the dollar yen, but they'll go into the green shortly as well. Dollar yen's coming is contrary. I can't explain it. I don't know why, but it's not going the way we thought. The yen has its own. They all have their own fundamental characteristics. The yen in particular, what has a certain safe haven. Can we leave them for the weekend? What's the long-term trend like? Gabriel asks. Well, those are 2 different questions, sir. You leave them for the weekend if you're making profit by the end of this day. And I'll stay in these positions. I'll monitor them till I don't know, sunset maybe. I don't know, 4. I may monitor them for a few more hours. But if they're still running strongly, I'll leave them for the weekend. And as you know, those are expensive things to do. You have to. There's all sorts of charges that are involved in holding positions over the weekend. But if your positions are good and strong, and you think that the trend is going to continue on Monday as well, which it sometimes does, certainly in a case like this, I would hold on to them. Yes. Now the long-term trend for these pairs, you have to look at them. Each one is a separate discussion, Gabriel. There's no shorthand answer for any of them. But I do see, this is what I do want to point out, that once the trend that we expect gets underway, volume grows. And volume plus directionality is the essence of this indicator, the force index. And that's, it combines volume and direction. And when it's above the 0 line, as it is here, that indicates a trend with legs, as we say, a trend that's likely to stay in train. This one sure looks like it has legs, ladies and gentlemen. Again, we keep having to refresh this because it's just the way it is. But they're all in profit now. All of those trades are profitable, and likely to be so. The only one that's lagging again is that dollar yen, but it's coming back. They're all getting there. They're all getting there. So far so good. That dollar yen one is sickly, but it's okay. It'll come back. Maybe, maybe not. We'll see. We got to monitor this. But now Gabriel says, "Thank you, Superman Zimbabwe." Who are we talking about, sir? Who is Superman Zimbabwe? I haven't heard anything. I said I'm Superman. I'm surprised. I usually don't refer to myself in such luxurious terms, but well, thank you. I take the compliment, but I'm really. Oh, and you're from Zimbabwe. I understand. Well, I'll take the compliment. So far so good. So far so good. Any more questions, ladies and gentlemen? We're now solid 10 minutes into this, and these trends are looking good. Are looking real good. Now, how long you want to hold on to them, obviously it's a personal matter. I can't advise you on that. But volume is increasing in all of these. Volume is above average in all of these positions. Here, I don't have it marked in all of these. But you can see volume is growing. The ones where, I don't know why I don't have these. I suppose I could do them all quite simply if I wanted to take a minute. There you go. Just a matter of updating the template. This, by the way, is, we're working here in MT4, which is a fine trading platform and a fairly useful graphing system. It's not optimal, but it's it has its beautiful features. It does have its virtues. And one of them is the template system of, well, it's as you can see here. So we're doing well. All of them are performing fairly, as you can see, the volume is growing. That's a sure sign that that there's a lot of sentiment behind this. More, the total amount of trades is increasing. So this is looking really good, ladies and gentlemen. In terms of profits, I apologize. My trading system, this one screen is taking its time today. But I mentioned this. At least we got filled. That's the key. That it's a little slow in reacting now is less important. But these trends are in train. These trends are in train, and I don't have to look at the trading platform. I know that there's money on the table. There's money being made. Yep, all of them in the green, even the yen. Okay, this is looking good. I'm going to hold on to these for a while, ladies and gentlemen. So with that, I am going to take leave. It's now 12 minutes into the event. I think you got the idea. I think you understand how this works, and I hope you've made some money today. So ladies and gentlemen, on behalf of the staff and the management here at Alvexo, to our clients, we're always humbled and very grateful to you for your patronization of us as your online broker. And for those of you who are joining in via investing.com, who are looking for an online broker, please consider us opening an account with us. This is how we work. This is how we trade. This is what we think. We're honest, straight shooting up, stand-up brokers. We're not right all the time. We don't pretend to be right all the time. We do the best we can for our clients, and as you saw today, we did okay. It doesn't always work like this. I don't want to pretend it does, but we do the best we can, and so we hope that you too will join our family of traders and become a client of Alvexo. So, ladies and gentlemen, on behalf of all of us, thank you, Shane. Thank you for that compliment. Thank you for all of you for your interactivity. It's always a pleasure. On behalf of the staff and the management here at Alvexo, ladies and gentlemen, I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now. You too, Gabriel. Thank you. Enjoyed your weekend, and thank you again. It was a pleasure.